Central bank intervention. Why is this happening? In today's video, I'm going to cover what is actually going on with the central bank intervention, which banks are intervening and why, and what the next one is that I'm choosing to obviously capitalize on in the month of October. What is going on, everyone? Welcome back to the channel. This video is a very exciting one. It is something that I have been mapping out for quite some time. I have put the work in, the research in, and I think it's time to short the shit out of something. So if you want to know what pair that is, carry on watching. So why do central banks intervene? This obviously happens when their currency is in irregular patterns. When there is irregular trading patterns in between their currency and the dollar, i.e. the world's reserve currency right now. And that can be witnessed across the board. First of all, you had the Bank of England stepping in not so long ago, simply to assist pension funds from not going bankrupt and filing for margin calls. However, you've also had the PBOC, the People's Bank of China, which I'll show you shortly on the charts, all intervening simply to assist their currency that has been beat against the strong US dollar that we have in front of us. So, for myself, I have been spotting this next big trade as a lion would hunt their prey. So have I been hunting this trade. Let's jump onto the charts and I'll show you which pair that is. Right, this pair, super top secret information. No, I'm just joking. Euro yen. I think euro yen, I think the ECB are going to be the next central bank to step in, purely because you look at euro dollar handle trading at 98 cents to the dollar with a low of 95. I expect the European Central Bank to slowly but surely not necessarily intervene in terms of their policy, but slowly unwind what they've led the markets to expect. The issue with the current conditions is every single central bank super optimistic. Why? They all have the same inflation narrative. They all have the same inflation problem, and that is causing concern for us. So looking at the euro, right? I'm still expecting a bit of an increase in the euro, but looking at euro yen, I've got two central banks over here that are going to be intervening together. So that being said, you have the European Central Bank, right? Which I think has positioned itself too bullish, too hawkish, right? Too optimistic for what they can actually deliver. Should that be slightly unwound, right? Euro is going to take a hit, right? Intervention, right? So just to unwind what they have already expected and they have already put forward to the markets. Second thing, Bank of Japan, right? They are going to be intervening. Their yen has been crushed, right? Dollar yen being obviously the indicator that we look at, trading at just shy of 145. That's a major handle for the pair, right? Just pre what was that year? Pre 1998 highs, right? Major level, 24-year high on USD JPY. Looking at that, obviously on the weekly time frame, we are slowing down. However, if I just have to use dollar index, the dollar yen and the dollar index as my indicator, euro yen seems to be the pair for me. Euro yen, both technically and fundamentally, is lining up at an area of interest. Myself as a trader right now, I need to wait for that intervention, right? I need to wait for that intervention, or what that technically would look like would be just the likes of one or two of these lows being broken. Currently right now on the daily time frame, we are positioning ourselves quite bullish into the open. It is currently 7:30 in the morning, in the UK. I thought I'd share this trade with you. It's super interesting. We are obviously trading at a key area of interest right now. So for myself, I'm going to be closely monitoring price action. On the daily time frame, we have come into a key area of interest, right? Area of liquidity, somewhere where I want to be trading in and around. Looking at that on the 4 hour, price has obviously pierced itself into that liquidity region over there on the left, right? As a trader, we want to be selling high. We want to be selling high, buying low, and that obviously gives us that perfect risk reward opportunity to do so should we get that fundamental picture that we're hoping for. Fibonacci obviously in and around that 78.6 region, so it is a further confluence to note. 1 hour time frame. What I am now waiting for is some sort of rejection in price, right? Giving us that head, looking for that right shoulder over there before then showing price once again to the downside. So my risk reward on this would look anything along the lines of tucking my stops above the high. So I'm going for about a 50 pip stop. Worst case scenario on this trade, should price reverse. It is dependent that it does. I'm not going to go ahead and enter right now. Cross my fingers, hope for the best, because that's gambling, that's not trading. Don't do that, right? So should price obviously come back into this area of interest, then I am interested in taking this. And I'm looking to ride this down. I'm looking to ride this down. Go on the higher time frame for a second. 12 hour, by the way. Fucking amazing to look at price action. So should we have that reversal? This technically looks aesthetic. We have broken several lows. Price has come into a key area of interest. Lines with our fib. Multiple boxes ticked, right? I am looking for 135. I do think overall we're going to come back to revisit these lows of 135 very, very easily, right? How will this happen? If we have the Bank of Japan intervening, and if we have the ECB slightly unwinding their policy because they've been way too aggressive. You've had the Bank of England slow down. The markets are now preempting the Federal Reserve to slightly slow down or pivot, which means, friends, if the ECB follows suit, if the Bank of Japan decide to intervene, as we know they should, their latest statement was the fact that we're going to be buying yen with their dollar storage, which will send dollar yen south, which will take every other yen pair with it. Which other yen pair gives us the highest probability like we have over here? Pound yen, yes, but euro yen currently ticks every single box I have, and that is quite rare. So euro yen for myself remains on my watch list for October. This could be a 750 pip banger to the downside should this happen. So that's what I'm looking out for. This obviously is not financial advice. Trade this in line with your own risk management and your own analysis. This is my point of view on what I expect, how I'm going to be trading euro yen to the downside over the next couple of weeks. Stay tuned on the channel. Do like, comment, share, subscribe, and I'll see you in the next video. Take care. Bye-bye.